Now, the wave of public sector strikes is also hitting the UK economy, which flatlined last month. Despite a decent performance by the construction industry, the Office for National Statistics says walkouts by teachers and civil servants has offset any growth. Well, our economics correspondent Heli Ebrahimi joins me now.
Well, Victoria's been talking to you about the healthcare imperative for a solution to the industrial action. I'm going to talk to you about the economic ones because today we had the latest UK monthly figures and it shows that the UK economy is basically stalling. You can see here, this is the monthly data all the way back from 2007. That first little dip is the financial crisis. The big dip, that's COVID. And you can see we've finally clawed our way back to pre-pandemic levels. That's basically all we've done. We're basically just at zero. And compare us to the US, where the economy is 5% bigger, or even the Eurozone, where the economy is 2.5% bigger. There are some real questions.
And what's holding the growth back here in this country?
Well, today's figures did show some seeds of growth in retail and construction, as you said, but there's been a real significant hit to sectors of the economy, like education, where there have been strikes by teachers, for example. The Office for National Statistics said without strikes, the growth story would be more positive today. This is really important because you've got the Chancellor, Matt, in Washington at the moment at the IMF, insisting that we're headed towards growth, not recession. But when growth is wafer thin, as they say, a small thing could throw it off course.
And how much are the strikes actually to blame?
Well, you know, the ONS isn't very happy with providing a number because they don't do the what could have been number. But economists at Pantheon have worked on a rough calculation for us, just to give you an idea of the scale of what we're tackling when we're talking about strikes. Their estimate is that it could cost £3.5 billion. And this is by factoring in the hit to education, health, to public administration. And this is just the direct impact. It doesn't take into account, for example, childcare costs if you have to stop working. The difficulty, Matt, is that you had a warning today also from the chief economist of the Bank of England saying that the desire for higher pay embeds inflation. And that ends up creating this doom loop where interest rates have to keep going up. But of course, everyone is searching for higher pay because we've had this momentous hit in the form of historically high gas prices, which has squeezed real incomes. But here's what the Chancellor had to say in Washington about why he isn't meeting doctors' demands.
I mean, when it comes to pressures in the NHS, we understand that people are working very hard. We understand that people have had pay rises that have not matched inflation, and that's why we've introduced cost of living payments of around £3,000 for the average household up and down the country, nearly £100 billion of support. The one thing we won't do, because it would be a terrible mistake, is to agree to an inflationary pay rise that means that we're still talking about inflation in a year's time.
The Chancellor. Well, joining me now is Dr. Javoon Sandhu from the progressive think tank, the New Economics Foundation. He's standing as a Labour candidate in the next general election, and the former Brexit Party MEP Ben Habib, who now runs a property investment company. Welcome to you both. Can we agree, since we're trying to have the theme of medicine and all this, on the diagnosis, right? What do you think is happening in 20 seconds?
Yeah, let's take the big picture view. We are the weakest economic recovery in the G7 because we haven't had enough investment, not enough in our insulation to get our bills down, not enough in the NHS, which you've got a weak labour force and 500,000 people leaving, and not enough in infrastructure. That's why we have the weakest economic recovery in the G7.
What about low productivity, and what about the impact of Brexit in all this?
So the first on low productivity, we do need investment in infrastructure to get our productivity up. That's certainly been the case. Also with Brexit, we've had a constant drama over the past 6 years. It's time to settle down and move on and move forward.
But apart from the drama, has Brexit depressed the numbers, yes or no?
So it has certainly had an economic cost for us, but actually on the other side, it is now time to move forward.
OK, Ben.
Well, I'm delighted we're moving forward from Brexit. Look, I think there are two fundamental things going on here. First of all, we have an economy that is too highly taxed, too highly regulated, and we have a fundamentally broken labour market. And they're linked, of course. It simply doesn't pay to work in the United Kingdom anymore. Wages have been under pressure for the last 13 years. inflation and have some sympathy with the 35% figure that the junior doctors came up with, because actually in real terms, they probably have suffered a 35% reduction in wages. So what we've got is an economy that is unable to sustain higher wages because it's not growing, and it can't grow because taxes are too high and we're over-regulated.
But you've got to start fixing it somewhere. You've got to administer the medicine at some stage. So what would you start with? And
Well,
would you give them the money they want?
Well, first of all, I would absolutely not have increased corporation tax from 19% to 25%. I'd reduce taxes on businesses across the board. I would probably increase the tax-free threshold for the lowest band from 12,000 up to 20, possibly 25,000, taking lots of people out of the tax net and making it pay to work.
But what about their pay demands?
The junior
Doctors'
doctors,
pay demands, for instance.
you can't afford it. You can't afford 35%. As justifiable as that figure might be, it's unaffordable.
Okay. Now, do you agree with what Ben had to say, or do you have a different solution to the problem?
Well, the thing that is holding us back is the lack of investment, right? You need a return on the investment. We don't just need to have what we have had in the past, which is massive tax cuts for the rich. It hasn't made us more prosperous. We had, by the way,
I didn't mention tax cuts for the rich.
the lowest tax. We had the lowest corporation tax rate in the G7 and the lowest business investment rate. Why? Because we didn't have the infrastructure that we needed, the skills that we needed. Businesses don't just locate in areas where the tax rate is lower. Otherwise, Somalia would be richer than Sweden. That's
But when
certainly not
George
the case
Osborne,
today.
the one good thing George Osborne did was to cut corporation tax, and actually GDP went up quite dramatically after that. And we've just had a very tangible example of AstraZeneca choosing the Republic of Ireland over Liverpool for its next facility, and because of corporation tax.
But isn't it a bigger problem? It's not just about levels of taxation or even levels of pay. It's about levels of education. It's about bringing up our woefully low productivity that we've had for 10 years now in an era of cheap money that, frankly, we've squandered, haven't we?
Well, that's exactly why we have seen so many people leave the labour force, 500,000 people out because we haven't had investment in our NHS. People are too sick to work. That is costing us in economic growth. We are having a situation where people can't travel backwards and forwards to work. And like you say, a lack of investment in skills as well. I want to pick up, by the way, on the corporation tax point, indeed what's happened over the past decade. We did have a corporation tax cut. We've had stagnation for a decade. Our wages are lower than they were a decade ago. We need investment to get growth up.
But you get investment if you give people the incentive to invest. I mean, I run a business which has a foothold in Poland and the UK. Corporation tax here, 25%, Poland, 19%. Poland growing, UK stagnant. You can imagine where I'm thinking of investing.
I'm not going to let you off the hook quite so easily for Brexit, because you were one of the many people who said this is the vision for our country, right?
Absolutely.
We need, deregulation. We're going to become, the Singapore on Thames and all that. We're not Singapore on Thames, are we?
We haven't.
There's tons of red tape.
We haven't ejected a single EU law that is on our statute book.
But is it about that?
The
Because
retained EU law bill has basically been
But
thrown
that's
out
not
of the
what's
window.
slowing down the trade, is it?
No,
It's
but
the fact that there's so much extra red tape.
Well, I mean, we've got actually the worst of all worlds, Matt. Being absolutely frank, we've got Brexit, but we've done nothing to take advantage of Brexit. Brexit should have been an opportunity to do precisely what you just described, which is to get rid of EU bureaucracy, to make the United Kingdom make policies that suit the British national interest and are designed to propel our economy, not the European
But is that still?
Union's
But Jivan, is that La La Land fantasy stuff, or is that actually a real possibility that we just haven't implemented yet?
I mean, I certainly say that there's no regulation that Ben can point to that's holding back British
I
business.
absolutely
There is
can.
nothing
Hang
that
on,
we
let
have
him
in a situation where actually we have, for example, in this country, right, we have the highest inflation in the G7. Why? Because we have some of the highest energy bills. Why? Because we haven't got renewables and home insulation. That's higher
because we're
bills for
driving
businesses.
towards- I
That's
mean,
higher
here's-
bills for businesses.
You've
It's
actually-
higher bills for households. That's the reason why we are seeing another drag on growth on the other side. It's not just this Singapore on Thames, this fantasy land that Ben sometimes likes to live in. It's about how you get return. And Ben, by the way, you are a businessman. As a businessman, you want to see return on your investment. That's not just about the cost of doing business, it's about the revenue side as well.
Let's just be clear.
Are you producing more?
Okay,
One
hang
of
on a
the
minute. We've only got 20 seconds left.
You asked me for a policy that I get rid of. One of them is this drive towards net zero, which undoubtedly is a fundamental contributor to the increase in our fuel prices.
Javoon, you have 10 seconds.
Absolutely wrong. The way we get future prosperity is to get to net zero. It's the way we get our energy bills down today. It's the way we get wages growing in the
Economic harakiri.
Okay. To be continued. Javoon Sandhu, Ben Habib, thanks very much to both of you.